Alright guys, today we're going to start off by talking about position sizing, risk to reward, stop loss, and following the plan. Okay? So a lot of you guys right now, you guys are doing the prop firm, and the positions that you guys get in, you guys are way oversizing, especially the ones with FFN prop firm. You guys are basically, if you guys are in express, it doesn't make sense for you guys to size the way you guys are sizing. For example, 50K accounts. Um, Pull up the amount here. Let's say for 50K accounts here, right? It doesn't make sense for you guys right here, 50K. You guys have a profit target of 3,000, trailing drawdown of 2,000, right? If you guys have express package, you guys can only make $450 a day. There's no way that you guys can, use two contracts. Two contracts when it hits $450, that is what? That's 20%, right? Yeah, so 20% with two contracts gets you that right away. You know, that's 40 ticks. But most of the time, when you guys are trading, when you guys making that trade, those trades when your stop loss is way more than 40. It's about 30 to 40 ticks already. So you're risking about 1 to 1 on every single trade just to get $450, right? But when you guys do lose, you guys are basically losing, 400, and that's saying that you guys are basically gonna make one, like win one and then lose one, win one, lose one. But what happens when you guys lose two? Now you guys are down about $600 to $800 on a day. Maximum you guys can make is 450, right? Makes no sense. Whereas, let's say if you, yeah, you guys can unmute yourself and just chime in on the questions too.
For
That
sure, for
way,
sure.
yeah. Um, yeah, so let's say right now, let's say 50K account, right? Position sizing. 50K account. Most people, you guys want to play two contracts because obviously you guys want to scale, right? Preferably you would like to scale. That's what you want. You don't want to just go in one contract, you know. But most people they oversize with two contracts, and what happens is, like I just explained, when you lose way more than $450 with two contracts, right? But now let's say if you do only one contract, right? Or 10 micros. 10 micros equals one contract. So you're halving the size, which is, with even with 10 contracts, that's pretty aggressive sizing for the 50K account. Even though it sounds like it's not, but most people are trying to just pass it all in a couple weeks when in reality, even the FFN bosses they specifically told me look at it for a 2 month process. But everyone's trying to pass it within a week. So let's say for example, right? We do micro MNQ. Let's go to a micro page here. Micro. We're gonna do scale in three. We're gonna scale three at a time. Okay. So this is basically we're gonna get to scale three times. That'll make us end with the 9 micro as full lot size. Okay. So when we want to go in full position, that would be 9 contracts of micros, right? So what you guys are used to doing is collecting 40 ticks, right? If you were to do two NQs minis, all you need is 40 ticks for you to hit that $450 on the 50K, and you hit quota. Let's say, right? But now let's say we do only micros, we would need double that, right? We would need about 80 ticks to 90 ticks to hit that $450, right? So that would take you about two good trades, two good trades of 40 ticks each trade. That's gonna get you to that $450 profit mark. But if you guys been noticing, every single day we've been hitting 100 ticks. You know, our trades hit 100 ticks on the regular, right? So literally, you guys could be scaling in at, you know, up to a full lot size of 10 micros or 9 micros, and you can get that in one trade, $450. You know, but the problem is that you guys are not holding you know, you guys are not following the plan. Your stop losses are not good. They're not good placement. So you guys are either getting stopped out too soon, and then the play runs without you, or um, you're taking TP too soon. You're taking your profit too soon. You know. So, for example, right? Let's just say this. Let's just say right here, if we were to enter shorts, right? Our stop loss would be, let's say, here, right? The correct stop loss for this play would be here, technically. Either here for a tight stop loss, or this location right here, this placement, the 15110. Tight stop loss would be here. A good stop loss would be up here, because that's the high, right? You don't want it to, you know, retest that high. You don't want it to go there. Làm được đi. Okay, okay, làm đi, con đang record, con đang record. Yeah. So, so let's say we were to enter shorts, right? For example, right here. I'm gonna enter short. This is sim, so I'm just gonna enter shorts. Filled. This is where I would enter shorts. You see a little rejection here, right? So this is my scale, only 3. Right? My stop loss would be placed either here, right, for a tight stop loss, or here for a good stop loss. But obviously, look at how far that is. 16 ticks is here. This is 38 ticks. Not bad, but you know, during market open time, this is probably like around 60 to 70 tick. Right. So what happens with you know, the way you can gauge your position sizing, right, is when you are sizing lightly, you can have a wider stop loss. Okay, just because, you know, the guideline is about 30 to 40 tick stop loss, you know, it doesn't mean you can't have a 50 to 60, 70 tick stop loss. You know, none of that matters, because at the end of the day, look at your risk to reward. This is a 1 2. So this is basically a 1 to 2 risk to reward right here. You see, this would be the 1 to 1 risk to reward area, but we're aiming for the target down here. You see, so this is a, you know, 1 to 2 risk to reward right here. So even though it looks like a huge wide stop loss, it's okay, because you're risking this much to make this much. But the problem with that is that a lot of people, what happens is, by the time this play hits here, they collect. Right? Now their play is 1 to 1 risk to reward. They collected at the 1 to 1 mark. And then, or they would trim here, right? They would trim here, and then they would, you know, take a little run in here. So by then, it's about 1 to 1.5. You know, so the right way to play is you should be collecting majority of your trim right here at this level. This is where you should be trimming. So let's say I just bought another one just to scale in. So stop loss would be there. So I would trim half my position there, and then now I would take that further. Right? By the time this move, let's say, moves down there, I can now move my stop loss up down here. Market. Oh, okay. Yeah, so it says I can't move it. But I would move my stop loss down to this area right here. Once this level passes here and it comes down to here, my stop loss is now at this level. Or I should either here, or I'll start trailing it, you know. I'll start trailing it down there. Right? But most people, what happens is they are already taking their TP all right here. Gonna record. Yeah. So right? Am I right when I say that? Most people collect right here. Right? That's where you guys basically collect. And this is, let's say we were aiming for the 40 stop loss up here. This is the 40 mark, and this is the 80 ticks right here. Take profit, right? Most people already took their profit right here at the 1 to 1. So in retrospect, you're not trading a 1 to 2 RR at all. Your first TP should be down here. The second half, you can try to shoot for more, but you trail that one. You trail the second half. So in the end, when you do get stopped out, you'll stop out somewhere around, right around this area. You'll trail it, and if market does decide to go from here to here or here to here, and then it stops out, you get stopped out right there. This is where you get stopped out right here. You see, you don't lose much, but at least you try to give your play room to go, right? And that was my mistake in the beginning also, is that I play the 1 to 2 RR, but most of my full position has been taken around here, you
Wait,
know. Hmm?
no, sorry.
Yeah, so most of my position would be normally taken here, and then until I kind of realized it one day, and it just doesn't make sense. That's not a 1 to 2 RR at all. 1 to 2 RR is here. This is where our TP should be. So with this kind of play style, right? You don't have to size aggressively. You know, like normally you'd be playing two. What is it? Two minis, and you would take profit here, right? You would take profit here, and you'll be done for the day. But you're playing a 1 to 1 R right there. That's your play. Whereas if you size down half, you can actually play the 1 to 2 RR. You can actually your play can actually play out, and that's the correct way of playing because otherwise you're literally scalping all day 1 to 1 RR all day with the other size. You're risking as much as you're putting in, and you're risking as much as you're winning. So one wrong trade could turn that whole trade upside down, right? And a lot of time, what happened is when you're oversized, your stop loss can't be wide. You know, let's say if you're in one contract, right? Your stop loss is let's say 40 ticks. That's $200 loss. But if you're in two contracts, your stop loss is $400 at the same spot, right? But now with one contract, you can actually have a wider stop loss. You can move that stop loss all the way up here, you know, and have that same amount loss, but you have more room for your play to go all the way down here. Do you guys get what I'm saying? Does that make sense?
Yeah,
Most people try to scale up and oversize, but then they cannot handle the loss. Their account, there's no way their eval can handle that loss. That's the problem. The size of that eval will get blown with the amount lost at that stop loss, right? So instead of playing that 1 to 1 RR, all you guys have to do is just size down, have the correct stop, and let your play out. See, like let's say if it does get hit here, you get stopped out, right? But take a look, the play can go all the way down here, you know. And look, right now, let's say I'm in this position. It's only 120. If I add more, it'd be 240. That's too much of a loss. Whereas if look, I can literally make this even higher. Give this more room with a smaller size. But obviously that stops. It doesn't make sense right there. Um, yeah, most of the time, the issue with everyone is that the risk to reward, man. I see people, they say they play 1 to 2 RR. They say they play 1 to 3 RR, but they don't. They take their profit at like 40 ticks. You know, who here actually holds their play until 100 ticks? You know, who here actually gives their bracket like let the price actually hit the target. Right? Most of you guys take it before it even gets to the bracket because it's the price starts flinching. See, this is where I would
Order
add right here.
filled.
I would well, now I'm in one too many, so I gotta trim one because realistically, yeah. So most of the time you guys target this area, but you guys never let the price actually get to that price, right? Am I right on that?
Yeah, yeah, yeah. They don't. They get the proper reward. They should.
Yeah, it's like everyone sees the target, but you don't allow the price to even the trade to even play out to that price because you either start trailing too tight, your stop loss gets you guys bring it down to way too tight, and you get stopped out halfway. So what I've been implementing, which you saw the trade today, was that I didn't move my stop. Even my trail was moving, but what I did was, let's say my stop loss was right here, I kept my stop loss there. As the price moved down, right? The price can move down, and my first TP would be, you know, like here, right? The only reason why I would trim some here in a scenario right here is if price starts showing support, all right? But what I'm trying to do here, this is the whole space right here that I'm trying to give it. It can bounce around all at once in this area as long as my stop doesn't get triggered, right? It can go, the price can literally go like, let's say like this, this, this. I don't care. None of this matter. None of this should matter. All this price action shouldn't matter. As long as it doesn't pass this level right here, the stop loss. You shouldn't get spooked out because that's the part of the plan. The part of the plan is that it won't reclaim the high right here. So, see, the price should be like this. Let's say there's a trend line there. Once it passes there, then yeah. But then see, this is my stop loss. Then I would respect it. It doesn't matter how the price goes from here to here, or you know. And then let's say a lot of people, this is how they would get spooked out right here. They would go like the price would drop like this, hit this, right, and then it will go like this. They'll bounce. They'll take out, like they'll exit. But look, you're supposed to let it go. Do this. It's gonna start doing this with the trend line. And then what? And then it's gonna do this, and then guess what it does? It's gonna do this again. This is how the price moves. Or like it'll bounce up like this, see, to that level. See, it'll kind of bounce like this, and then that'll be like a kind of like new high. That's just how price move, right? So what I've learned is that I've learned to hold through all that price action. And sometimes they'll even do this. It'll scare you. It'll even go up to the high again, right? But none of that matters because this whole area, none of it matters. That whole price action doesn't matter. That's just sideways consolidation. You see, your goal is down here. You know.
Yeah, they're just fucking around to like freak
So
you out. Yeah,
regardless of yeah, exactly. So regardless of how price moves, it should not shake you out, right? Because you're gonna at this point you're gonna be like what? Maybe you're gonna be up. Let's say 10 micros. You're gonna be up like about $200, right? And then you're gonna see your play go back to break even. Then like 100. It's gonna fuck around with your emotions right here, and then negative 100. You know, and then guess what? Eventually, it's gonna take then it's gonna drop back to this area again, and then it's gonna have, you know, and then what it's gonna do is gonna have the last shakeout usually when every time it goes for a level, that's an opportunity for it to break. You know, so it's probably gonna go down here, try to shake you out one last time like this, pass support a little bit, then it's like this, then like this, then it's gonna make it a lower high, something like this, and then boom, it's gonna hit. That's exactly what happened today in that play that you guys saw me post. It did that. This is exactly what it did to me. but I held. I didn't move my stop loss. It tracked and my trail kicked in. I moved it back up to the same exact position. Because you know what? Like at the end of the day, before you guys enter a trade, you guys need to know that that trade, the potential of that trade is losing 200 or gaining 400. You know, and I think the sooner you guys accept that, the sooner the better off you guys will be. You know,
We
most
got
people
to
that
accept. Yeah.
yeah,
Wait.
most
Quick
people
question.
that enter the trade, you know, thinking they're only gonna win. They forget that they can lose. You know, so they only think about the winning side. But you're risking this much, 200 to make 400. That's kind of what it is. You know, and what happened is that when with people, right, they see that their play is up $200, and then they start thinking, oh, I should have taken it. I should have taken it. When they see something like this, $200 right here. Then suddenly, oh, maybe I should take it. Maybe I should take it, right? Some BS like that down here, and then fucking reverses up here. Now suddenly they're only up 100, and then they should have taken it 200, break even. You know, sure, you can argue that you could have taken it and re-entered. You could have, you know, but this was originally your entry right here. You had a good entry, you know, and you just gave that up. You just gave that up for like a bunch of BS here that could happen, you know. Every time you enter, you open yourself up to new risks and you're exposing yourself to new risks, right? But this is kind of how the market moves right here. Literally, this is what it looks like. You know, that's just how the market moves. It likes to break past points a little bit, come back down, break, and then shoot down. It finally gives up, right? See, like something like this. You know, uh, see, it's like makes a little lower low, and then finally one last shot up to wipe out every. This is where it wipes out all the liquidity and hunt all the stops there because technically your stop people stop for these kind of plays would be like right here. You know, so they move it up just a little bit more just to stop you. And then they shoot for and then after that, look, this would be a break of structure. You see, like that. That's how the play would play out all the time. Here's a perfect example, right here, as we speak today. Here it is, right here. Something similar like that right there. But this one's slow price action. See? This is opposite, but for the upside. Here it is happening right here. Some BS right here, right? Bunch of wicks, a bunch of wicks. Finally breaks out, breaks structure, shoots up. You know? That's right there, the play that. See all this BS right here? Look at this. All that right there was to knock you all out. You see that? Look, they passed supplies just enough to wick people out. I mean, demand.
Yep. Uh,
You
what
know?
do you think about entering half and then entering the other half when it goes against you, so you have a better average?
All right, what was it you said?
Going in half and then adding the other half once it's against you, it's like 50% to get a better average. Or even just waiting for your entry to hit and then not going in until it retraces, so you'll get even a better entry.
What do you mean by that? I'm a little bit
Like,
lost in
let's say
that
you're
question.
supposed to enter now, it just becomes valid. So you're supposed to enter. However, you don't, and you wait for it to go against you so you can
Oh,
enter for a better average.
okay,
So you have
okay, okay.
higher risk
I
and better
I get it.
reward.
So that is actually your issue, right? You're talking about your issue. That's the issue that you always have. You're always late to the game. You're always late. You hesitate on your entry. You yeah, your execution has a hesitation. Right? That's kind of been what you've been trying to overcome. So based off of that, right? So what you're saying is, you see how I answered, right? I answered here. It reverses, you know, and then what you're saying is because I entered here, you want it to come back up here to enter, right?
Yeah, so you have less risk and more
Yeah, so
reward.
this is where you're at right here, basically with the with what the market's doing currently right now. Um, so the what I think about that is that yeah, sure, it's good, you know, but what happens is a lot of times when a move is moving and it's strong, it's gonna leave without you, you know. So you're not gonna usually when a move is happening and it's about to happen, it just takes off, you know. A lot of times the reason why we enter, right? We don't enter on what happens is look, for example, when we enter this play right here, let's say, um, so when we entered this play, we didn't just enter it because it rejected, you know. Look, it rejected, came up, rejected another time, right? And then came up, rejected again. Then look what it did again here. It came down, then it came up again, and then it rejected again. You see? Look how many times it's already done that. You know, this wasn't the first time when we entered this play that of rejection. You know, so how many more times do you think it'll reject before it actually takes off without you? You know, in this scenario, it's consolidating, so that's why you're able to have the chance to get in. But most of the time, you're not supposed to just get in. Like you're not supposed to just see this kind of mover here and then a small rejection and then enter. No, that's not how you would do that. You're supposed to let that play hit it, come down, hit it again, come down. The second time around, you enter. You see, it already showed support or resistance there. It's accepted that price. You know, it shows that it rejected that price or accepted that price. And in this case, it rejected that price. You see,
Okay.
right? So by the second time already, in a good market, this should be going down like two here to fill that imbalance at least right there already. You know,
Hmm.
in a good market, that's where it should be targeting. And you know, but in a choppy market, that's why you're seeing this now. Easy. But in a good market, you shouldn't be seeing this. You know? See?
Okay.
So in this case, yeah. So here's the thing though. But you know, guess what? Here I only entered a starter position here, right? This is my starter position. And then when it came back up here again, right? And then I see it kind of like, you know, showing support here, back and forth. You're right. That's when I would enter another one. I would scale in right there. So I don't need to scale in when it's like I don't have you know scaling in. You can do it from the top. You don't have to scale in around down here once it passes. You can also scale in up here when you see it holding the level. You know, most people, you know, they what they do is people that average in the way they scale is like this. Price goes up here, they buy right there. Boom, a little resistance, they buy, right? And then comes up here, boom, another ad right there. You know,
Hmm.
they don't really care if it's rejecting. They just add because it came back to that price where they bought in. Now their head is like they're basically playing off of greed. They're thinking, oh, you know what? Here's another chance for them to add more to their position. You know, shit. Hold on.
Just keep recording. You don't have to include it if you don't like the pieces that we're gonna add.
No, no, I'm just pausing. I'm just pausing because I had to walk away. But look, here's the play playing out, right? See, in a case like this, you look at volume. Look at the volume. 3 minutes. I would add full
Order
position.
filled.
Obviously, I'm oversized right now, but you know, so in this scenario, this is how I would add. You know, when it when it runs past that right there, that's an inverted hammer in or pin bar, whatever you call it. Engulfing candle. That's where I would add. You know, stop loss is up there
Would
still.
you wait for the close?
Would I wait for the close? It's already 2 minutes in on this 5 minute candle. You know,
And the
um,
volume.
yeah. Look at the volume too. You see it? See the it's already almost as high as the previous. previous bar, right?
Mm-hmm.
So because it's almost as high as the previous bar already, this volume bar by the time it ends is gonna be higher than that one right here. You see? So look at this area right here. So you see? Look at this right here on that volume. It has 2 minutes left. It's gonna be higher. It's gonna beat that previous bar,
Nice, nice. Yeah, I understand.
right? And now,
Yep.
okay, so since I just added in, right? Since I just scaled in, I scaled in 2 times. That's my two scale right there. My original stop loss is up here. You see? Didn't move
Yep.
that, but now my scale would be about here. You know, if this level cannot hold and it comes back up, I'm removing what I added. The only reason why I added was because it passed this level. Right? There's the drop. Boom. Right? Here's the imbalance. In a good market, this is where it would go to, right?
Right.
But we're not going for that. I don't know what the market sentiment is currently, by the way. Oh, I'm just doing some BS levels. But give me the RS. I'm in the RR levels. But I don't know if it's actually gonna go down here because I didn't really look at the market yet. But in normal market, let's look at the smaller time frame. This is where the area we would target right here, right? Imbalance. We would TP here, right here. This is where we would TP. Right? But see the ad, it worked out. Now if it moves above, I would remove 2 contracts back to my original starting position. So a lot of people, what happens is when they add in, right, they're now risking their full position, even if it goes to a loss.
Oh, they don't reduce risk when
They don't
appropriate.
reduce their risk if the play goes against them. They're not reducing their risk. They're keeping the same amount of risk, you know. And I'm a victim of that sometimes, but because it's hard, right? It's hard to, why would you add in if you think the play's gonna play out, right? And you're thinking that okay, you're gonna respect your stop loss, but the play was only added, the contracts were only added, and he's only scaled in because it passed that level. If it didn't pass that level, you need to move it back to your original position. If you added two, you need to take two off. You know, like let's say I added like right around here, right?
Right.
So if price goes above this green body right here, I would remove two, and then now if price goes below it again, I would re-add. You know, vice versa. We're basically playing like the reason why you add is the reason why you remove, pretty much.
The
Right?
thesis is invalidated.
Yes, exactly. If it went above that, then why are you still in the same position? The same position. You should be back at your starting position.
Yep.
And then from following the plan now, man. People are horrible at that. You guys got to look at the TP and your analysis when you guys first started the trade, right? Most people forget what their analysis was even, like their take profit or their stop loss. Suddenly, all that information that you know, they decided on to enter the trade goes out the window.
Yeah, logic goes out the window.
Yep, it's all emotions after that. But logically, when you enter the play, you had a level, you had a target. But take a look at this volume bar, guys. You see how big it is compared to the
Yeah,
previous
it's
one.
very big. Go
You
for
see
it.
that above average also. You see, 2 minutes in, it's already near that volume. So what do you think the next 2 minutes is gonna do? Obviously, it's gonna pass it. You know, uh, and what happens is when volume comes into the market, it's gonna get more and more volume added to that. People see volume, they're gonna all hop in.
Yeah,
You know,
domino effect.
uh huh. And then I guess we'll talk about volume too. Then now, since there's not a lot of people that
So
understand volume.
one last thing. So basically, the point is, if you're saying we do light size, we could do wider stops. But if we do wider stops, then the risk to reward gets skewed. So the appropriate thing is to size in correctly and don't chase it and reduce risk.
Yeah. So um yeah, that's one thing, is that you guys gotta implement is that when you guys start a starter position, you can keep that starter position the way it is. You guys technically don't even have to scale in, you know. That's why like you have to know your RR, right? Your risk to reward, is that trade even worth risking that much money, you know? If you're risking 1 to 2, great, go for it. But then depending on your let's say your prop firm accounts and how much you're risking to lose, you can't afford to risk that much with, let's say, 4 contracts or 2 contracts. But you can't afford to lose that much at that stop loss with 1 contract. You know, like with 1 contract, you're able to lose that with no problem. You're not gonna be sweating. But then you can actually have that RR play out, which is down here. Let's say, right? So less. You're also gonna have less emotions too. You're gonna be risking $200 maximum to win $400, man. You know, 50K FFN accounts express. That's all you need in a day. You literally can make that. In one trade. But when you're oversizing, man, you're just targeting this area. You're literally scalping. You know, for that amount to just so you can hit that quota for the day. You're hitting basically from here to here, or from here to here. 1 to 1 right there. You're risking just as much. But if you lose 2 of these, you're now down 800. You know, that's why
Stop film.
everyone. So that's the scale that just got taken out. I took out the scale basically. But yeah, so if you play like this, man, take a look. It's very uncomfortable to hold trades when you haven't, if that's not what you're used to, and if you're a scalper, it sucks. It sucks seeing your trade go from green to red and then back and forth, plus 200, to minus 100, vice versa. But this is what it's gonna do. The market does this. It's gonna be like this, and then it's like this, and then it just messes with your emotions, and then it's gonna go down like this. Then you're gonna think you should have gotten out so many times, and then it's gonna do this, and then it finally shoots down. That's just how the market moves. Um, yeah. So, and then with volume, okay, let's kind of move quickly to volume real quick here. Um, let's see.